The President and CFO at Cholamandalam Investment and Finance, joining in on the show right now. Arul, hi, great to have you on ET now. I was just looking at your numbers. Your NII has grown nearly about 12%, and the PAT has seen an uptick of 20%. Tell me, what were the key drivers behind this quarterly performance for you?
Actually, it had been the flow-through of the cost of funds benefit because it was expected, we spoke about it earlier also, that the rate reductions that happened in the Q1 will flow through in Q2, and which is what you're seeing. Also, we have been able to hold the, OPEX in spite of, investments into new businesses like gold. We are able to hold it at the same 3% to asset ratio. So these two had been favorable to us. While we had improved on the NCL, it had still slightly on the higher side, but I think over the next 2 quarters, we should see improvements over there also, so that we should reach the 3.3% pre-tax ROTA comfortably for the full year.
Mr. Selvan, hi, morning. Let's talk about your AUM. That grew 21% on a year-on-year basis, but this has happened even as your disbursements have, that growth has remained largely flat. Now, does this reflect a deliberate strategy to prioritize quality and yield, or are there any early signs of demand moderation that you're seeing?
The reduction in disbursement, what you're seeing, on a comparative basis, or assets which are of a very short duration, like the supply chain finance and in the unsecured loan book, etc. Which is why, in spite of the reduction in disbursement, you are seeing a growth in the asset, because what we are substituting them is with assets which are of longer tenure, so that the AUM growth is happening in spite of then the visually or optically reduction in the disbursement growth. Yes, there have been some segments like home loan and LAP which have shown slightly lower disbursements as compared to Q1, but that is the fact with in Q2 being a lot bit of an inauspicious months, etc. This period, the traction on new home purchases, etc., will be very, or new vehicle purchases will be low. So that has impacted to an extent, and which is a normal case if you look at the pre-COVID sort of scenarios in Q2. Q3, Q4 festival seasons post-harvest, you should see improvements both in disbursement as well as in asset growth as we move into the second half.
Right. And what about your NPAs and gross NPAs? I mean, as well as net, they've inched up slightly, right? Which portfolios are seeing the most stress according to you, and how do you plan to steer your asset quality improvement in the second half?
Precious months, but that is the same reason which always happens mostly in vehicle finance, because the earning potential of the customers are very low in Q2 because of the rainy seasons as well as the inauspicious months. So they tend to have a lower repayment ability in Q2. Actually, this turns around in Q3, Q4 when the festival season starts as well and the harvesting starts, and their traction or their load carrying potential improves substantially. So this will reflect in the Q3, Q4 numbers. The stress is more in vehicle finance and also a little better due to the unsecured book, where we have taken action to come out of the fintech partnerships. There is a little bit more pain continuing in the fintech partnerships, which should also run down by the end of the H2 of this year. Well, there will be a residual tail in the subsequent year, but I don't think that would make any significant difference in the coming financial year.
That's on vehicle financing, but Mr. Selvan, let's talk about loan against property. The disbursements over there have grown up by about 8%. AUM growth over there also is healthy. Now, as credit costs in the NBFC retail space, they are expected to stay elevated through FY26. Amid this situation, how do you view the credit cost outlook for your own LAP portfolio, and what could be the growth strategy for that space?
The LAP portfolio is, even now their credit costs are lower than what is in the industry. And while it comparatively over last year, same quarter, it may look little elevated. That is primarily because last year we enjoyed the write backs on account of SARFAESI actions taken on our accumulated NPA numbers during the COVID period. So that had pushed down the NCL number substantially. It was even negative for some parts of the year. So that is what you are seeing, comparatively seeming to be a little on the higher side, but I think they are doing very well, and we will see that this will be one of our prime portfolios in the years to come.
So what about your AUM and profitability guidance for the rest of the fiscal?
So we banked exactly in the middle of what I said, 20 to 22%. So we are at 21%. So we should improve from here. So but right now I'll hold it at same level, maybe improve it by 1% or so. But let us see the Q3 traction. We are seeing good traction. GST impact has been favorable. We should see some traction on the vehicle finance coming through. And also we should see the gold loan picking up. So we will see that also having some good asset growth coming through from that, because especially last year this was not there. So this will be a straight addition to the bottom to the AUM line. So we should see that such improvements coming through, and we are confident, and we are positive about the AUM growth to be in the 21-22% levels.
Okay, Mr. Selvan, good to be chatting with you. Thanks so much for your time today.